Hey, this is Matt from InvestiQuant. Today is Thursday, May 27, 2021. And yesterday made the fifth consecutive day that the market has gapped up in a row. So by gapping up, what that means is the opening price is above the prior session closing price. Yesterday made 5 in a row sessions where the opening price was above the prior session closing price. So that's the pattern that is testable within Discover, and we can see what has that type of momentum led to historically, specifically when you're getting your first down gap after that type of pattern like we're seeing develop right now. So let me go ahead and set that up in Discover with all 4 instruments. The setup's based upon entering the market long at the open of regular trading hours, which is 9:30 a.m. Eastern time. The exit will be set to the close of regular trading hours, which is 4:15 p.m. Eastern time. So currently we are trading lower. It looks like we're about to break that streak. I don't know yet because market has not opened yet. So we may continue higher and continue that streak, but we're down quite a bit here ahead of the opening print of the session. So I'm going to go ahead and put gap down for the gap direction. Then I'm going to go into the price patterns library, and I'm going to grab the 5 consecutive up gaps in a row pattern, which is from our prior gaps category. And it's also available here in our active today section, which lists everything that's true for the current session. So if I come here to the prior gaps, I can see day after at least 5 up gaps in a row. That'll add the pattern to this test that we're going to be looking at. And then lastly, I can put us in a similar market environment where we are above a 10 and above a 200-day simple moving average. And now I can click view results. And here we go. These are the results based upon entering the market long at the open, which is 9:30 a.m. Eastern time, then exiting at the close, which is 4:15 p.m. Eastern time, when you're opening lower than the prior session close, but the prior session made at least 5 up gaps in a row. So the market has been gapping up consecutively at least 5 times, and then it gaps down. And this is taking place above a 10 and 200-day simple moving average. Historically, the S&P has seen this pattern take place 52 times. The NASDAQ has 61 samples, the Dow has 61 samples, and the Russell has 48 samples, and that's dating back to 2003. And if we look at the win rates on these, they're all fairly similar. You've got the S&P coming in at 62% of these have closed above the opening print, so they've ended up with a green candlestick 62% of the time here, historically speaking. The NASDAQ 59% of the time, the Dow 59% of the time, and the Russell 56% of the time. So on average, they have certainly closed above the opening print and finished with a green candlestick more often than not here. And if we look at the average win and average loss, very similar numbers there for the S&P. The NASDAQ has a larger average loss compared to its average win. The average win is larger in the Dow than the average loss, and the average win is larger in the Russell than the average loss. So it's really just the NASDAQ that has a larger average loss than the average win. The others are neutral or somewhat favored. So historically speaking, this pattern has been a bit more bullish for the day that gaps down following those 5 consecutive up gaps. So hopefully you found that helpful. Good luck today. We'll see you next time.